$200,000. Yeah, that's not an annual salary we're talking about, and it absolutely wasn't just a stroke of luck. That is the exact profit pulled from a single day trading gold, all thanks to a calculated structural setup. Welcome to The Explainer. I'm your host, and today we're going to break down exactly how you can find and capitalize on these massive market shifts. So the secret to this entire $200,000 trade really boils down to one specific mindset from our source material. Quote, the moment price breaks a lower high, you need to instantly stop thinking price is on the same trend. End quote. It's all about recognizing the exact split second the market tips its hand and screams reversal. Today, we're diving deep into the anatomy of a 200K reversal trade. We're going to reverse engineer this exact day 9 gold trade breakdown step by step. We'll show you exactly how to spot, time, and execute these high-probability setups without getting faked out by all the market noise. Here is our roadmap for the explainer. First, anatomy of a reversal. Second, the time frame shift. Third, writing New York volume. And fourth, soft TPs and runners. Part 1, anatomy of a reversal, breaking the lower high. Okay, so to really understand a reversal, we first have to understand the structure of a trend, right? A lower high is simply a peak in price that's lower than the previous peak. It signifies a continuation of a downtrend where the sellers are firmly in the driver's seat. You can think of these lower highs like a structural brick wall built by the sellers. As long as that wall holds up, the trend just keeps on going. But the moment buyers finally generate enough momentum to smash through that wall, control has completely shifted. And this is the exact shift that played out on the day 9 gold chart. During a downtrend, sellers are maintaining those lower highs. They're fully in control. But during a trend reversal, that lower high gets broken. Buyers seize the momentum and completely shift the bias from sell to buy. This breakout is what the source material calls the indication. You've got to be open-minded enough to catch when this happens and instantly flip your bias. Now, what happens immediately after that break is absolutely critical. It is not a break and retest. It is a correction. See, once that lower high breaks, price usually pulls back down in this messy, chaotic sort of way. Honestly, the pullback feels like a trap or a failed trade. But here's the secret. It's actually the setup. The market is just grabbing liquidity. It's literally taking money from impatient breakout traders to fuel the real move. It's a calculated pause before the true continuation kicks in. Part 2, the time frame shift, satellite to microscope. So we use two totally different views to plan our attack here. The 1-hour chart is our satellite view. This is where we zoom out to spot that structural reversal, the breaking of that lower high. But listen, you don't execute there. Instead, you drop down to the 5-minute chart. This is your microscope view. It lets you closely monitor that messy, liquidity-grabbing correction we just talked about. That way, you can pinpoint a precision entry right when the market is ready to resume its new trend. Part 3, writing New York volume, timing the execution. Let's walk through exactly how this day 9 gold trade unfolded chronologically across the market sessions. Overnight, during the Asian session, we saw a lot of consolidation, just pressure building up. Then, early morning during the London session, that's when the critical indication happened. It broke the lower high, pushing all the way up to 3,296. Pre-9:30 a.m., we got our correction pullback to grab liquidity. And then, 9:30 a.m. hits, the New York session opens, and that is where the execution happens. London broke the structure, but New York provided the fuel to actually ride it. What's great is this turns abstract theory into a really strict, actionable execution plan. First, you wait for price to hold above that 1-hour support. Then, you watch your 5-minute microscope chart to literally reject lower prices, because seeing those rejections means buyers are stepping in. Next, you wait for the 9:30 a.m. New York bell to ring. And finally, you execute the buy as volume floods the market. It's patient, it's mechanical, and it keeps you out of those frustrating fakeouts. Part 4, soft TPs and runners, managing the trade. Okay, you're in the trade, but to protect yourself from greed, you need to use a soft TP, or take partial. This just means securing a portion of your profits at predetermined 1-hour resistance levels. Essentially, you're paying yourself as the trade hits expected swing highs, while leaving the rest of your position open. This way, you're protecting your capital and locking in a win. But crucially, you aren't capping your upside by closing the whole shebang at once. And that builds right into the ultimate goal, holding a runner to capture the long-term trend. Once those soft TPs are hit and you've secured some profit, your remaining position is effectively risk-free. By holding a runner, you don't have to sit there and trade constantly throughout the week. You can confidently stay in a massive gold trend for a long time, turning a precise day trade entry into a highly profitable swing trade. Honestly, that is exactly how a setup turns into a $200,000 realization. Let's quickly review this powerful 4-step checklist so you can start recognizing these high probability reversals on your own charts. Number 1, spot the 1-hour lower high break. That's your indication. 2, zoom down to the 5-minute chart microscope to weather the correction. 3, execute exactly on the New York session volume kick. And 4, set soft TPs to pay yourself and hold a runner for the long term. So, the market just revealed its hand. Are you patient enough to profit from it? The structural setups are always there. The market constantly tells you when buyers or sellers are losing control. The only thing standing between you and the trade is your own patience to wait out those messy corrections and execute when the volume perfectly aligns. Thank you so much for joining me for this explainer. Keep your charts clean, stay incredibly patient, and I'll catch you next time.